Bitcoin and crypto are at the most critical turning point in this entire year, and that is the battle for 30,000. We absolutely must hold on to this number if we want any chance at the fabled super cycle, the double bubble fractal of 2013, where we pumped through the first few months of the year, dumped through the middle part of the year, and then finished strong. Again, we're only in July, so there's plenty of time to resume a bullish trend at the end of the year, and by many technical analysis belief, if we hold and grow from 30 and don't sacrifice to the bear gods and go down into the mid and low 20s, then there is a narrative that we would have accumulated at the lows here as long as we accumulated at the highs. Now remember, we spent about 3 months at the highs there of the $60,000 range, bouncing around there, and if we spend about 3 months accumulating at the lows, then we would have achieved from a TA perspective a healthy consolidation and reaccumulation. So this $30,000 level is also important if you want the Bitcoin super cycle to continue. Again, I made the decision for the abundance of caution as well, as I've been through this before. I've seen the breakdown throughout 2018, and I don't believe that we're currently in a position ready completely for mainstream adoption. As much as I was hoping for it, the Ethereum transaction fees and lack of scalability, as well as we saw scalability issues on other chains when they got so popular, I think we still need a few more innovations to really hold the weight of mainstream adoption. And for that reason, I think that we do need a little more time cooling our jets before we go back up. That's why I've had a bearish bias, and I've also just been through this, guys. I've seen the relief rallies. I've seen every dose of hopium dealt out, and I do believe that having a bearish bias throughout these periods preserves capital and allows for you to stay in the game. In case the market drops dramatically, you could buy into your favorite coins at a huge fire sale discount, accumulate throughout the bear market, or even just have that capital ready to deploy once you know for sure that things are looking bullish again. Again, we had many months where things were super obviously bullish. Those were from the middle of the summer last year to the end of the year in 2020 and the beginning of the year where everything went up only in 2021. So of course there's going to be more opportunities to deploy capital, and I do think having the belief in preserving capital in a bearish bias is okay and definitely something that would benefit most people in these times. Now that said, we're also seeing a familiar pattern here where the BlackRock CEO is claiming he sees no demand for crypto. And I think this is really funny. It reminds me so much of what happened in 2018, which is that all of these institutional smart money investors came flooding in and they all left with their tails between their legs. By the way, they only set up their hedge funds and set up their products at the end of the 2017 bull run, beginning of 2018, and then continually got dumped on. And that's because this smart money is always late to the party, and it's always up to the contrarian retail investor to benefit disproportionately from the crypto ecosystem. This is happening pretty much every sector, and now it's happening with NFTs because institutions have no idea what to do with NFTs. And so the people who are making the most money are the passionate community members. It's a beautiful thing to see. We'll get to a little bit of NFT news later. I also wanted to talk about this, which is a tweet from Joseph Lubin. And this explains to me why you need to be paying attention to crypto, especially during the absolute hardest times, especially during the worst times. This is Joseph Lubin at the end of 2018 saying, I'm calling the crypto bottom of 2018. The bottom is marked by an epic amount of fear, uncertainty, and doubt from our friends in the fourth and crypto fifth estates. Now, what he goes on to explain is, look, there is epic FUD happening. And this was at December 21st, 2018. So if we go here, obviously I'm in the Axie chart. I was going to talk about that a little later. But if we go here and I can show you on the Bitcoin chart what we looked like in 2018, what you'll see in December of 2018 is that this was absolutely not the exact bottom to the day, the 21st, but he called it right here. $3,000, what was it? $3,800 Bitcoin. Yes, we did nuke down to a low $3,000 earlier that month, but he called it right here, which was post-bottom about as soon as you could call it. And this is just a fantastic call out by Joe Lubin. And what he's trying to say here is that, look, the bottom is marked by FUD. The bottom is marked by sentiment. And I've been saying this the whole time, crypto is very hard to value. So you can't mark the bottom by prices. You can't mark the bottom by developments. The developments only get better and better and better. The tech only gets better and better and better. The amount of people who want to be a part of this typically only grows, over time, up and to the right. Of course, during bull manias, it goes crazy and then it fades. But over time, more and more people become crypto folks. Now, The actual bottom of the market is marked by disdain. And so that's why it's really important to track the sentiment analysis and to stay engaged with the community. Because if you were here in late 2018 and you were still engaged and you were tracking this and you say, hey, look, this is the bottom, guys. This is disdainful. Everyone's super sour. And you were able to take a few bets. You could have bought a Bitcoin for $3,800, right? You'd still be up 10x, right? Even at the bottom of this, hopefully, bear market, we just see that this is the way to invest, is to track the sentiment and be counter-cyclical. So that's what I want to impress upon you, is that some data suggests that this is a critical turning point. Again, we could nuke much lower, but no matter what, the number one thing that you can do to benefit from this market is to stay engaged. Plain and simple. We also have lots of fundamentally bullish news here. Jack Dorsey saying that Square is going to start producing a Bitcoin DeFi product to allow people to do DeFi on Bitcoin. Again, the biggest criticism of Bitcoin is that it doesn't do anything. So if you allow people to earn aggressive yield on their Bitcoin, this is very, very exciting. So I'm a big fan. And as Bitcoin becomes more popular, more useful, more valuable, so too does the entire crypto market. It's a very, very good thing. And we should all praise Sir Jack for doing this. Again, PayPal news, putting out some fundamentally bullish stuff, allowing for people to increase their purchase limits to 100,000. Again, you see no impact on the charts from PayPal news, unlike earlier in the year. This is a good sign that we're still in a bear trend, because in the bear, news doesn't do anything. In the bull, news does everything. New logos create pumps in the bull market. In the bear market, even PayPal creating some bullish news won't move the needle. Now, in a story I think everyone should be following, we have a judge allowing for Ripple to depose an SEC official. Now, this is a double-edged sword, because one, we definitely want the SEC not to just have complete free reign to ad hoc target any crypto project that they see as outside the lines. We need clear structures. We need clear frameworks. However, we also got comments that are a bit confusing, because Bill Hinman, the SEC official, said in 2018 that Ethereum's not a security because it's sufficiently decentralized. And so those comments have been a very confusing thing, because Ethereum did an ICO with absolutely no product back in 2014. And again, Ethereum being not a security opens the door for pretty much everything to not be a security. So it's very important, first of all, that Ethereum not be a security. It's also very important that there is some two-sided accountability here for what the SEC does. Again, this story could have massive implications on the crypto ecosystem and nearly every project within it. And we will see over time what is going to happen here. I will be tracking it and giving you updates. And if that's of value to you guys, please give me a thumbs up. It's a free way to get this video into the good graces of the YouTube algo. We also have Binance stopping trading stocks effective immediately. Again, maybe this is some regulation here. We'll have to see what happens. The regulatory environment is evolving rapidly, and we will see exactly how this ends up. Some NFT news here. We have Masterpieces, Swiss bank issuing NFT shares in a Picasso painting for $6,000 each. So you could own your own Picasso for just $6K. Again, we're going to see how this works out. We've been talking about fractionalization for big pieces of art. A lot of art collectors have come out of the woodwork and contacted me over the last few months during NFT Mania. And everyone's trying to figure out how to get into NFTs and create digital ownership over interesting and unique assets. This, to me, is a very, very promising field. Fractionalization of true existing art, of digital art, of music rights. All those things are extremely, extremely exciting. And finally, we have fantasy NFT soccer platform SoRare raising $532 million in funding. What an eye-watering number that is. That's the institutional demand to get into NFTs right now is deafening. It is overwhelming, and it is quite possibly the most exciting sector of technology that exists across the entire world right now. So while the bear market might be in full effect, NFTs and NFT trading is in full bloom, and the desire for these big money bags to get in and stake their claim in the ecosystems of the future is reaching a fever pitch. So remember, there's always two sides of the coin, and right now NFTs are moving into the future at an extremely rapid and impressive pace. So Bitcoin and crypto's fate hangs in the balance, but I'm focusing on the sectors that are continuing to evolve, none more rapidly than DeFi and NFTs, specifically NFTs. It's actually one of the most incredible things I've ever seen. I didn't think NFTs would be this popular for another 5+ years, and here we are. I can only imagine where NFTs will be in 6 or 12 months, let alone a few years from now. Regardless, what we see is that 30K is the magic number for Bitcoin. If we hold above it, we can potentially grow and turn bullish towards the the end of the year. If we sacrifice 30K, we will probably nasty nuke into the 20s and begin a bitter bear cycle that may continue for many more months. Again, my video the other day was based on math, and we arrived at mid-February as the ultimate low of the bear cycle if this is to repeat the bear cycle of 2018 and 2014. However, hope springs eternal. I do believe that there is a huge possibility for DeFi and NFTs to decouple to some degree. NFTs, more than anything else, specifically within games, have the ability to completely decouple from this market, and I'm going to be aggressively covering, interacting with, and helping develop that space over the coming months and years. So if you guys are excited for that, if you got some value out of this, please give me a thumbs up. It's a free and easy way to support the channel. Make sure you subscribe for daily videos on Bitcoin and cryptocurrency, helping you get ahead and stay ahead of the market. And make sure you put that bell notification on. It's a way to get around some of the gatekeeping and censorship that is known to happen on centralized social media platforms like this one. If you guys want more Elio Trades content, I encourage you guys to follow me on Twitter at Elio Trades. The link for that is in the description. As always, I thank you guys so much for watching. My name's Elio Trades, and I'll see you very soon on the next episode.